All right, everybody. Tom Gentile, welcome to our session for the day, Monday, August 9th, 2021. Glad to have you all here today. Hey, guess what? Play like a champion today. That's the theme. We got a lot to going on today. I am going to get into all kinds of stuff with you. Let me throw some stuff up on the screen. Let's talk about what we're covering today. So I've got a market view. I want to talk about a market view today. I want to talk about August patterns. We've got some meme earnings that are happening, really AMC, but I'm throwing Coinbase in there and Disney. These are my top three that I'm looking at right now. Doesn't mean I'm trading all three, but it does. I definitely have one of these mix. Maybe those of you on the screen could tell me of the three that we're going to talk about today. Let's bolster it up a little bit. Of the three meme earnings I have, AMC, Coin, and Disney, which of these three do you think I have a position in right now? And by the way, if you follow me on a regular basis, then you know the answer to that question. Does Tom have a position in AMC? Does Tom have a position in Coinbase? Does Tom have a position in Disney? Or all of the above? All right. You can feel free to text me your answer right now because it's going to be one of those four. One of those four I'm in right now. So I'll let you think about that one, mull that one over in your heads here as we move forward for the day. Guys, before I get going, before I get too far down the rabbit hole here, which is Tom's Trading Room, just real quick, let's get this out of the way. Pause this if you want to read it. Two quick things. Number one, stock options and crypto have large potential rewards, but also large potential risk. And number two, I'm not your money manager. I'm not your investment advisor. You know what I'm here to do? I'm here to show you how we spot opportunity, spot rules-based opportunities, create what I like to call low risk and or high probability trading opportunities, and then finally planning, executing, and managing those opportunities. That's what I like to do here. Okay. So let's pop back over for a moment. Let's talk about this, what I'm seeing on my screen. Now, I'm not looking at this screen, everyone. I'm looking at that screen. I'm not looking at that camera. I'm looking at that screen. 1, 2, 3. Okay. I'm going to number 2. And the reason I'm looking at number 2 is because that's where all of the comments are coming in. So real quick, I want to say good morning to everybody. Taryn, good to have you in here as well. Linda, Grand Rising. Yep. Huntington Beach is in the house. And then, of course, we've got some answers here. JP's got an answer in there. Taryn's got an answer. Curious Fam answer. Diana, good morning to you. Guys, so what do I have in here? I have one of these stocks. I'm going to get to which one in just a few minutes when we go through a market overview. All right, I'm going to do that with you here. But let's do this. Let's get into first. Let's talk about what I'm planning on covering with you guys over the bulk of our time together today. Backing up. So I want to talk about, and I'm leaving this on my screen, even though I'm going to be filtering in and out. So the very first thing I want to talk about is the overall, what's going on in the overall markets. All right, so overall markets look like this. I've got a couple different charts I want to share with you. Let's drop some knowledge on the day charts here. First of all, SPY. Again, what I have up on the screen this week, for those of you that are new with me, I tend to look at Fibonacci levels. All right, I'm going to get in here. I'm going to get real down and dirty. I'm going to zoom in as much as I can. It's going to get a little messy, but that's just the way things work here. Now, I'm starting down here. If you take a close look, March 4th. On March 4th, we had the S&P had a little bit of a pullback, not much of one over the course of the first couple weeks of March, right? 376.68. That starts the leg up that you see, all right? Leg up you see, moves higher. We'll get to those in just a moment. But more importantly, all the way over here to the hard right-hand side is today's price. Today's price puts us out to 442.50. That's our price that we see as of, sorry, this is Friday's price. Let me put the latest up here because we had a little wiggle room here this morning. There we go. Not much. 44250 is the high that we see going on over here with our most recent high. We got some Fibonacci levels here. I'm not going to really talk about these with regards to the SPY. You know why? Because we're not at these levels right now. We have not formed a top. We might have formed a very, very short-term top as of Friday. We're pulling back a little bit today, but we have not formed a top yet in the S&P. S&P trend is absolutely heading to the moon, right? Going higher. And honestly, if you look at the trends, if you look at the fundamentals, which are out of the way for the most part, and no news is good news on Wall Street, and if you look at seasonals going into August, they all are pushing higher moves in the market, okay? So SPY, I want to roll right on by. Let's look at some confirming charts. This is the bond chart TLT. Now, TLT, we actually, in the last 125 days, we had a low down here below 134. And then from there, we started to, again, move higher. And we had a high on the chart, 125-day high that happened, I want to call it a couple weeks ago. This occurred at 151.46, right? 151.46, as you can see. And then where are we right now? We've had a little bit of a pullback. This area here, this area you see here, that is the 38% retracement. So if we move from the lows back in March to the highs that happened a couple of weeks ago, this is a 38% pullback from that low to that high. 144.76 is what we see on the screen. Okay. Now I'm going to update this real quick, see if I can move these numbers at all. What I also see is I don't see any big moves that are happening in SPY or TLT. The other thing I noticed is that I don't spend a lot of time on this one either. UUP, the cash, dollar cash. Dollar cash is higher today. Not much. It's very quiet compared to the bump we had on Friday. But we are close to monthly highs. Now, if you go all the way back to really the end of March, 25.05 down to 24.13, we came up and we went right now. When you go low, when you go high to low, what you're looking for is retracements to possibly look at potentially a bearish trend. And everybody was had the idea that the U.S. dollar was just going to get cheaper, cheaper, cheaper. Well, when you look at the U.S. dollar in terms of commodities, that might be true. Commodity prices have been higher and are going higher. But when you look at the U.S. dollar compared to other currencies around the world, it might be a little different story. And it has been a different story since June, as the U.S. dollar has ran up and is actually near the high side for the month, right? Over the last couple months, it's catching back up. Nothing here really shows me that the markets are likely to make a huge move off the dollar. Now, if we get above 25, that 25.14 level, and we post new highs in UUP, then I might start to get a little concerned about the stock market, but not right now. USO. All right, so here's one. You guys have been around with me for any length of time. You know that I was talking about being long oil literally from the middle of February up until July. Then the pattern reversed itself. So right now, we've got this concern. The concern we're seeing right now is that that reopening trade may not be reopening very soon. And all of a sudden, that's putting a damper on oil stocks, that the consumer is going to huddle back in their house. I honestly don't think that's going to happen. I think we're going to get a little bit of that, but the oil markets could be overreacting. In any case, I don't care. I'm bearish on oil anyway, right? I showed, I believe it was last week or the week after, a bearish opportunity in oil that's actually working out very well. 140, if you take a look at when you look back to what I was looking at, I had 145, this area right down here, 45. 45.05 was my target. Now, that was when we were trading up near 50, right up in this area. So we've dropped in, and I've gotten about 2/3 of that target that's happened in USO. I still think USO is going to come down and test these levels that we saw. Well, you got to go back into July 22nd, July 21st, 20th. These are the areas that I believe we're going to test out. You can see where oil is today. It has a gap down. It's gapped down through last week's low. Now we're heading for the 30-day low. We hit that 30-day low, I'm going to take profits and move on. That's USO. Now, let's talk about GLD. All right. Last week, you probably know, last week I said GLD was coming down and it was actually bouncing around in this area for the last couple months, where we had these lows down here in the 165 area, and the high was around 171. There was a 6-point move that I was looking at here. Well, guess what we did today? We broke that 6-point move. Now, I'm not ashamed to say that I sold puts on GLD on Friday. And I will tell you that I have a loss on that position. It's actually a fairly sizable loss. All right. But I can feel good in knowing that what else I'm going to show you here has a more sizable profit that offsets that loss. And again, it's not about one trade, folks. This is the one thing you're going to learn from me here. I don't know if you can learn it from others here. I do know that that there's a lot of folks that are pushing the day trading scene and pushing the meme stock scene. We're going to get into the meme stocks in a moment. If you're looking for what I'd like to say, a more consistent way, a more non-emotional way to trade, for those of you new, welcome. This is where you want to be. I am a rules-based trader. I'm a pattern trader. Doesn't mean I'm right 100% of the time. I'm not, right? But what I do is I follow things that happen over and over again. Gold is not one of those things. In fact, if you heard me talk about this on the channel before, I say I am an investor in gold. I am not a trader in gold. However, when we broke down in this area right here, we're actually trading right down in the 163 area, 163.06. Where's the next level of support for GLD? Guess what? Right down there. 157.49 is my next support level. You see, there's that. It's hard to see on the screen, but it's the little blip right there, right? We could come down. Now, we get down into this area. This is where I believe it becomes a trader's market in gold, not an investor's market. Investors, you know what investors do? They buy, they hold, they add to their position. That's what I'm doing with GLD. I just happen to be doing it selling puts. It gives me a little bit of money for my obligation. And my obligation most recently was to purchase GLD around the 160, I think it was 165, 164 area, right? It was my last obligation. Of course, now we're below that. That's okay though, all right? That's one of those fire and forgets, okay? So we'll look at this one as a tradable if it gets down in this area, or there will be one other area that I want to look to trading this, and that's if the seasonalities kick in. They haven't kicked in yet, all right? But the seasonality trade is coming for gold and GLD. So that's GLD. Let's move into the next item that I want to talk about, which is VXX. Now, I've been trading VXX and have been a hedger on VXX. I will tell you what I'm doing with VXX. I have been shorting puts down here on these lows, taking in some decent premium by doing that, right? So if I look at VXX today, VXX is at 28.41, right? 28.41. And, you know, I look at that and I'm thinking, all right, how much lower can we go? We can go a lot lower. And what I've been doing is I did something last week called the roll down. And the roll down is that I closed out of last week's positions and I opened a new short put position in VXX. Now, what I'm looking to do is capture premium, because VXX lands as it gets lower. It's almost like hitting a tarmac. It doesn't drop. It doesn't descend at the same rate. Notice here, these lows are getting lower and lower and lower. They're getting smaller. It's not like out here. Out here, we have that big pop up and a big pop down. Down here, the pops get smaller, right? And I'm looking to sell the premium. And my idea on this trade is, number one, hedge against my long positions. Number two, take premium in and look at premium to offset any move against me in this position. Now, obviously, if VXX goes down too far, too fast, then it eats up the premium I have, and it can start to go against me. So we'll take a look at this one again later in the week and see how it's doing, or possibly next week if you follow me there. VXX is the symbol that I look at trading for the VIX. All right, let's pop in and let's start looking at some charts. Before I do on, and I'm going to get to my first chart on AMC, I want to back up a moment. And in fact, what I want to do is I want to change the chart on AMC because we don't need 125 days worth of data. We might only need about 75 to get that entire chart in there. Yes, that's pretty much all I need. Now, before I get there, let's pop over and see what's happening today with today's markets. All right, S&P 500, as you can see here, now I'm looking at the 5-minute charts. You can see the S&P 500 started out the day right up here around 442.45, did a little wiggle. Within 5 minutes of the opening, we're already down to 441.31. Looks like that's where the trend happens to be. I really look at these numbers after the first hour of the day, and what we'll do to finish out the day is we'll look at bullish and bearish points on the big ticket items, SPY, USO, GLD, and a few of our stocks as well to finish out that day. So we can do that. I'll also take a look at some of your stocks, barring any additional time, and we'll see what they look like as far as coming into today's Monday. All right. So there we go. That's SPY. If we take a look at TLT, TLT's catching some bids this morning. As you can see, TLT gapped higher and then ran up and made its high at the same time SPY made its low. From there, we started to trend back. But take a look at this. We're starting to catch some bids again. This tells me that we have not seen the lows yet today in SPY. Again, looking at this from a shorter-term trader's point of view. If you are a short-term trader, this is the one area that I can tell you I do look at, right? I day trade very, very little. In fact, most of my day trades all happen toward the end of the week, not on a Monday or a Tuesday. But Wednesday, Thursday, Friday tend to be the best times to be taking shorter term positions because of the momentum, because of what happens in the middle of the week that we don't get at the beginning of the week, and that is news, that is earnings reports, that's things that will drive the markets. That's what I look for. All right, so Wednesday, Thursday, Friday is my big sessions in the day market. I'm going to move to USO. You can really see this is the extension trade, if you want to call it that. Friday's close, Monday's open. Now let's expand on this. And I want to show you that because here's what's happening since Monday's open, just falling over. Oil is on a slippery slope right now, which I am perfectly happy with because I have put spreads in this. And I'm looking for, again, 45, pretty much low 45s. We're at 45.94 right now, so we're well on our way. I probably need about another 1.5% move to the downside, and then I'm going to move outside of that trade and move out of the way. So that's USO. GLD. Now, this one too this one's going against me, but again, I'm more of an investor in this one. I don't look at this one day to day as a trader, not yet anyway. But you can see GLD opened down and traded even lower, 162.36. We're now back to around 162.5. My latest long position by way of short puts is around the 164, 165 area. So you can see I got a little ways to go to get back to where my latest entry position is on GLD. So that's stocks, bonds, currencies, and commodities. And as I kind of move in through here, we're going to look at, okay, so let's talk about the stock. I mentioned this at the beginning of the program. I said, which of these three stocks am I holding? AMC, Coinbase, or Disney? All right, AMC, Coinbase, or Disney. All right, well, guess what? If you're just joining me, I am holding not all of the above, but I have a position in one of these three stocks. So if you're just joining me, you want to be part of the conversation, here's a question for you. Of these three stocks, AMC, Coinbase, Disney, which of those am I holding? All right. Give me some chatter in the comment section. Tell me which of these three you think I am holding. And here's a quick clue for you. All right, I got a clue for you. So if you have been joining me on any of my broadcasts over the last several weeks, you should know the answer to this. Okay? You should know the answer to this. I'm going to reveal that answer in just a few minutes. Let's talk about August patterns first before I get down and dirty into those meme earnings, because that's the area I want to go into right now. So patterns. Let's look at August patterns. And for August patterns, I got to turn to the money calendar. And then we can get into cryptocurrency, because I got some cryptocurrency stuff I want to share with you too. I had a Bitcoin alarm that went off early this morning, woke me up. And yeah, I'm a little bit on the tired side today, but it's a good thing. So this is the money calendar, all right here off of Tom's Trading Room and tomsoptiontools.com. By the way, folks, if you have not checked out our tools, we have a lot of one-click scanners, 1- and 2-click scanners. And if you're new to tomsoptiontools.com, there is a 2-week free trial. It's right down there, all right? Yes, below the banner, it says 2-week free trial. Yes, below that banner, it keeps moving like a stock ticker. No, in the description of the live stream, there is a link you can click on for a 2-week free trial to exactly what I'm showing you right here. This is the money calendar. The money calendar looks like a calendar. Today is August the 9th. Look what happened. We passed through. Remember last week? Remember last week when we had all that volatility? All right, so yeah, we're getting a little bit of volatility today, but it looks like when you take a look at what's happening this week that ends on the 13th, what's happening next week, which ends on the 20th, what happens the final full week of August, which ends on the 27th, I see a lot of green on the screen. Now, where does this all come from? Am I just painting these? Am I painting these green? No, I'm not painting these green. This green on the screen represents the last 10 years of the stock market, and more importantly, the last 10 years of the most popular stocks. So I take, out of the 20,000 plus stocks that are out there, I take about 350 to 400 of those. Why 350 to 400? They're the most crowded stocks. They have the most volume. They have the most open interest. They have on options, they trade weeklies. They are penny pilot. That means that they trade inside the 5-cent bid-ask window, i.e., everybody's trading these stocks. So I'm looking at them. And what we do is we take the last 10 years, and my algos will go through and look at millions of data points, start days, end days, 365 days a year. And we look for those patterns where we see either a lot of bullishness or a lot of bearishness. Now, what I do is I take that collective group. Not everyone's going to get a signal. In fact, you can see here today we have 79 trading signals. Let me open it up and show it to you. Right on the screen, 79 today, all right, that are popping up and giving us signals. 69 or 87% of those trades are bullish, and 10 of those signals are bearish. Now, when you have a day where 87% of your trades are bulls and 13% are bears, it's going to paint a green day. If you look last week, it was the opposite. 8% were bullish, 92% were bearish. That's why you saw the red day on the screen. Now, I'm going to click right into the 9th. Let's take a look and see what's going on today. What I see is I see the left-hand side, and this is how I look at this. This is a look inside August 9th. I have a lot of symbols over here. It's not every symbol in the stock market. It's symbols of the stocks that have patterns. The green bars represent bullish patterns, and if I scroll down, there's some red. There's those 10 red trades. Back up to the top. I have duration, how long the pattern is going to be bullish or bearish. NVIDIA is a 28-day pattern. We talked about NVIDIA last week, okay? RCL, CCL, CRM, these are all bullish patterns in, again, 9 of the last 10 years. Now, I also have more information available to me. I'm able to look at what the net profit was over the last 10 years. What was the accuracy of the pattern of the last 10 years? The average profit, the end date of the pattern based on the last 10 years. And of course, what was the last time this thing lost money? And then something called Power Meter. And what Power Meter does is it ranks each year. And are we bringing more money in as we get closer, or is the pattern flushing itself out? I'm going to show you an example of that. Let's take a look at, down here, Mastercard. All right, symbol is MA. So MA, and follow along with me here. I'm going to put it all the way to the top. Let's blow it up where everybody can see it, all the way at the very top. MA has a green bar to it. You can see that green bar. So come on over, and you can see that we have total profits. First of all, it's a 30-day trade, 30 trading days, $62.56 it has brought in during that 10-year pattern. 9 of those 10 years have been accurate, so it's 90%, 626 on average per year. This pattern ends on September 17th. The last time I lost money was 6 years ago, and it has a power meter rating of 150.18. Now, when I click on Mastercard, I get some more data. I see that we're buying it between now. The pattern is a bull between now and September 17th. Just so happens that, by the way, options end on, there's an option expiration date of Friday, September 17th. So I'm going to be looking at the SEP 17 options. Now here, this gives me a little more, time that when it starts all the way down to when it ends. There's September 17th. That's actually 40 days when you add the weekends and the holiday in. Come down a little more. I get some more stuff. Net profit, duration, average trade, accuracy. Now, here's a couple of other things that I like to look at. Maximum drawdown. How much did this stock go against you at any one time in the last 10 years during the pattern? So it had a drawdown of $21.74. That means it went against us. Worst case scenario in the last 10 years, it went against us by 21 bucks. The run up, the maximum profit that we've attained in the last 10 years is $39.80. So I like to find where the profit number is greater than the drawdown. Because again, you got to think about, well, what if I'm wrong? What's my risk reward? Now, here is an area of yearly trade results. Now, what I'm looking at here is from 2011 all the way out to 2020. If you see 2011, now remember, when I look at that, it shows me a P&L of $3.13. Now remember, that was 2011. Mastercard was trading at a completely different number back then. So I have to keep that in mind as well. 2012, 301. 2013, $3.30. 2014, 217. There's your loser right there. 2015, 476. And then things got progressively better starting in 2017. $12.10. 2018, 17.28. 2019, 11.58. 2020, last year, nearly $12 during the pattern. Now, what I can also do is I can click on any of these, and I could then get an idea, well, what exactly happened in 2020? We had this nice run up all the way up to $365 before closing out down here in the 337 area. So there's that big run up we were talking about. That big maximum profit potential was way up here if you took it. Now, at the same time, let's look at the loser. What happened the year it lost money? Wow. Okay, take a look at this. It was trading around the low 90s. It dropped all the way in. It had an intraday low down here below 75 before recovering, and then was a small loser, but was a larger. That was that maximum drawdown you saw there. Okay, so that's when you see those numbers that say run up and drawdown, that's where these numbers come from. The worst performing time in the last 10 years and the best performing time in the last 10 years. Okay. What I'm doing is, and I know it's kind of slow and steady here, is what I'm talking about, is how I evaluate these patterns and take these patterns from spotting an opportunity to creating that low risk trade or alternative risk trade. So in this case, what I'll then do is I'll jump to stock charts, and here's Mastercard. And here's what Mastercard looked like in the last couple months. So in this case, I've got a stock that went as low as $315 a share way back here at the beginning, at the end of January, really. Then it ran up into the end of April, got as high as $395.65. It held the 50% retracement level. And it's currently bouncing off the 38% retracement level. So there's a lot of support right around the 365.03 area. More importantly, you can see here that just after earnings, which happened last week, we had a short pullback. Same thing happened in the last earnings cycle. And then we started to get a little bit of movement to the upside. So At this point, I have to ask myself, okay, seasonally we look good. Technically we look good. Fundamentally, the earnings are out of the way. And they were good. And if you really want to go down the why, folks, well, people are going to start having to dip to their credit cards again because the free money for the most part is gone. All right. Moratorium on rent and mortgage, gone. So now I see more demand heading into credit card companies like Mastercard and American Express. By the way, American Express has a nice looking chart too. I just think Mastercard is the better play. So from here, I will then go look at option chains on Mastercard. And as I'm looking at option chains, remember, spot the opportunity, create your low risk or alternative risk trade, and then plan, execute, manage. And so here, what we're doing is, again, I want you to think about a couple things. For those of you, whether you're an option trader or not, okay, if you like Mastercard and if you follow these rules and you say, you know what, I'm going to do my homework and I like this too. By the way, this is not a recommendation. This is merely showing you how I step by step push through. If you look at Mastercard and you say, I like Mastercard, and you buy the stock, all right, what are you looking for as a target? That's where you have to go back to the money calendar, and you have to say, back at the money calendar, you have to say, all right, you know what? $6.26 is the average trade, but this is a big but. All right, this is a Kardashian but. What I'm talking about here is look what happened in the last 4 years. The last 4 years, we have doubled that average trade. So what we're looking for is something in the $10 to $15 realm as far as where it is now, where it could be September 17th. So again, let's pop on over and let's look at those option trades. So again, where's it going? We'll get to that in a moment. How long does it take to get there? September 17th is what I'm looking for. There's those SEP 17 options right there. All right. There are 81 strikes and 42 days to expiration as I see it. That's what I want. Now, I don't need a lot of upside because, this says Mastercard go up 10%. Heck, 5% is going to give me more than enough of these particular option quotes. Let me update the chart and let me show you what I'm looking at here. All right. Calls on the left, puts on the right. I'm not really going to look at the put options. I mean, there's a couple ways you could do this. If you really like Mastercard and you want to own this stock, then selling put options is a great way to do that. That's not what I want to talk about here, though, because that's going to cost you. I mean, even if the stock's trading at 374.53, we're basically at the 375 put level. Let's say you said to yourself, well, you know what? I want to buy it at 360. If you sold this 360 put, you get paid $6 a share, but you'd be on the hook to buy it at 360. But if you really want to buy it at 360, this might be a great way to do it because it's going to give you $6 per share in your pocket to purchase it at 360. That pushes your break even down to 354. But if you don't have that kind of money, because by the way, let me just show you real quick. Selling one of these, and by the way, this is a great long-term, I think this is a great long-term investment strategy. What I like to call cash secured put selling, one of the best long-term investment strategies that's out there for option traders. You're taking in credit, you're putting yourself in a higher probability bracket than buying the stock. You might not get the stock, but keep in mind, this is what it's going to cost you. All right, or this is the risk that you have, $35,400. Now, how do you end up with $35,400 of risk? Let me say that again, big. How do you end up with $35,400 of risk? What has to happen? What has to happen to Mastercard? Has to go out of business, bankrupt, goodbye. Is that going to happen? More importantly, is that going to happen by September 17th? Probably not. So you have to realize that it's not so much a level of maximum risk when it comes to buying a stock, especially a good stock. It's the level of cost that you have. What's the cost on this type of option? Well, this is going to be, most brokers are going to charge you about 20% of that number right there. So it's going to cost you around $7,000 to get into this particular stock. $7,000 to make $600 in about a month, in about 42 days. So if you look at that and you say, well, that's about an 8+% return in a month on just on the stock. That's not bad. Okay, that to me is a way of option investing. Now let's talk about option trading. So I want to go back and I want to look at those stock and option tables once again. I'm going to clear those out and we're going to look at the call option side. So let's take a look at this like a money calendar trader would. Here's today's price, 375. All right, let's look at today. Let's look at buying the 375s. The 385 calls, if we're looking for perhaps a 10-point move. I said 10 to 15 points. If we're looking for a 10-point move off of where the stock is today, how about selling the 385s? Now, the question is, what could you do that for right now? Right? I'll bet you could do it for a lot less than $375 a share. That's the stock price. I'll bet you could do it a lot less than $11.30 as if you bought the call. See, if you bought the 375 call and you paid $11.30, you could be right on the direction of this move, and you can still lose money. How? How many of you in this room right now watching this program, how many of you have been right on a stock? You saw the stock go in your direction, you still managed to lose money on the option. I'm one of them. I got my hand up. I've done it several times, but several times more in my past. Now, if I'm going to be wrong on something, I want to be wrong on something in a big way. I want to be wrong on something like gold today. You know, gold was down. Last night, gold was down $60 an ounce. Last night. It recovered the majority of that move. I want to say it was down almost 5% last night. And it made a big recovery between last night and this morning when GLD was trading. But you take a look at these 375 calls. Here's how you can be wrong on a stock going in your direction. If on September 17th, Mastercard is at 385, that money calendar did its job. The thing was a winner. But if you pay $11.30 for something that's worth $10 on September 17th, you have a $1.30 loss. Because if it's only worth 10 and you paid $11.30 for it, you lost a little money. So what we want to do is we want to make this manageable where it can make money. Where the call option buyer could lose money, the spread trader, the one that buys that lower strike and sells that higher strike, if Mastercard's at 385, can double their money, maybe even more. Let's see how much we can do this for. So I'm going to come up here. I'm going to hit the risk graph. We're going to get some information. What I see right now is this trade is trading for about 442. All right, 442 is, if you look at buying the 375 calls for 11.30 and you sell the 385 calls, and let's say you get 688 because that's right now the mid prices on both of these. 442 is the trade. Well, look over here. Your maximum profit is $558 on a $442 risk. That's 126% maximum upside. I'm looking for, if I could get 100, if I could get 50 in that move, great. Look at your break even. Your break even is 379.42. You know what your break even was on the call trade only? Well, it's easy to determine. You take that $11.30, you added 375. That's 386.30. That's higher than the target. I need to have something where I have a profitable position when we hit that target. And that's what this trade does. This trade gives us that profitable position. All right. So that's Mastercard. That's what the money calendar is showing me today as one potential trade. All right. Let me throw this up where everybody can see that, because I had it small, but you can get an idea of what it is that I'm looking at here and what it's trading for. And while I got that on the board, let's take a look at all those comments that popped in here recently. Wow, I see a lot of folks have answered the question. AMC, Coinbase, Disney, which one is Tom? What does Tom have a position in? Going to reveal that in just a few minutes, and we're going to look at each of those and see what's happening here. Again, and guys, you see here, and Lauren, you made an interesting comment about put selling. I'll put it on the screen here for everybody to see. It depends on how much cash your broker holds. All right, your broker. So I got it. The B's upside down. Where's the P and the B? Wow, those are way off, Lauren. You got a pinky hitting there instead of the index finger. You did one of these things. You used this one when you should have used this one. Anyway, but we got it. It depends on how much your cash your broker holds. So the minimum margin requirements on a put is typically 20%. And I say the word typically 20% of the stock price. However, certain stocks, like certain meme stocks, they may hold total cash. They may want 100%. Certain meme stocks, and there's one on this group, you can't sell puts, at least on the platform. A lot of cases, you got to call the broker. They want to hear it from your mouth. They want to hear it from the horse's mouth that you want to sell puts. Okay? And that would be on a trade like AMC. So I'm going to get to AMC. I want to do one more thing with everybody in the room. I had an alarm go off. I set my alarm most of the days when the markets are open. I set the alarm to make sure I'm up and can check things out. Now, for me, I have an Italian family. And the Italian family that I'm married into is one that likes to stay up really late. And we're talking 2, 3 o'clock in the morning, that espresso sipping 3 a.m. group. And then, I get a good, nice 4 or 5 hours of sleep, maybe 6 if I'm lucky. And so I got my alarm went off extra early this morning. And the alarm went off to let me know that Bitcoin jumped to some new highs here for the month. So I want to share that with you. And so I want to take a look at 2 cryptocurrency charts with you. BTC is the first one. Actually, I'm going to take a look at more than 2, but BTC is the first one. So, and I've been talking about this for quite some time here. Take a look. You've got, first of all, the fib chart, which goes from 58,643. Well, actually, you know what? We need to take that back a little more. Let's take a look at that long-term fib chart because this is off a bit. So I want to look at, let's call it the 120-day chart. I need to get that. There's what I'm looking for. That 63,558 level. And the reason why I need to look at 63,558 is because you see what's happened with fibs. We had that drop all the way down to 29,795, as you see on the screen. Let me put the screen up so everybody can see it. 29,795. Now, look what's happened here. Run up. We had a few days of a pullback. That was last week. All right. But that quickly changed course. And all of a sudden, boom, 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 boom. And all of a sudden, we're up. And we went into the weekend. This was Friday. Saturday, big push higher. Sunday, we pushed even higher, but then pulled back. And today, it's just been, and it happened late, early in the morning. I get the call, the ding on my phone. And of course, that wasn't what I was looking for, but it was very exciting to see that. Because, some of you know, I had a considerable amount of money that dropped when we went from the 60s down to the 30s. But I've had a considerable amount of money coming back in, and I've been buying on the way down as well. Now, my dollar cost average on BTC is very, very low, considering I mined a lot of it back in 2013. My dollar cost average on Ethereum, I'm going to look at that, very, very low. It's in the low hundreds. All right. It's less than 200. So I do have that, but I've been buying down on the way down too. And so, I bought some Bitcoin at lower prices. Bitcoin's going up. Bitcoin's next area of resistance, 46,677. That's my target. We get above and close above that. Then I'm looking at 50,661. And if we can get above that, then I'm really excited about seeing those old highs up here as 63,558 get taken out. But one step at a time. Step 1, target acquired. I said that we hit that resistance area. That was our first target. Now we're coming into target number 2. Let's see if target number 2 gets taken. And then finally, target 3, 50,661. Okay, let's look at Ethereum now. ETH is the symbol I want to look at. Take a look at ETH. Let me update the screen for you. Now, Ethereum also had its high, but its high came about a month after Bitcoin, and it ran up to, it was as high as 4,400, but the closing high, 4178.02. Then look how fast it dropped. This is this is a week. This is 2 weeks, counting the Saturdays and Sundays. It took 2 weeks to go from 4178 down to 1,800. 1,800 once, 1,800 twice, 1,800 three times. In fact, 786 was the low back not even a month ago. We're talking about 3 weeks ago, the low. And we had this run up. We've had 2 lower days in Ethereum. Ethereum has since then moved higher. And as you can see here on the chart, we're looking at the chart of Ethereum and where it is right now. We're very close to the highs that we put in over the weekend. What does the fib levels look like? These are fib resistance levels. 2,700, well, we went through that 1, 2, 3, 4, 5, 6 days ago. We touched it about 9, 10 days ago. Target acquired. All right, number 2, second target, 29.82. Target acquired on Saturday. Sunday, Monday, and here we go, 32.64.47. That's where I see Ethereum as its next target, folks. When you're looking at it on my screen, I blew it up for you as far as, or as really as much as I could here. Let me get my head back in here as I'm leaning in, taking a look at some of the comments that are on the screen. Glad to see all of you guys in the house. Hey, do me a favor. Do me a favor right now if you want to help support our channel. There's 2 things you can do. Number 1, like the video below. All right, give us some thumbs up. I like thumbs up. It makes me want to do more of these. Okay, that's what I do. I don't care how many people are here, honestly. You know, I mean, let the thousands of people go into the other rooms, because when they go into the other rooms, this is what you're going to see. You're going to see something like this. You're going to see somebody looking at AMC, saying it's going to go up. It's going to go up. It's going to go up. And yet this is what they're missing. You know, what they're missing is this. Check that out. This is the height of all the meme stuff that was going on with AMC. This isn't big enough. You guys got to see this if you haven't. All right, we rolled over. Diamond hands have been catching this from 60 all the way down to now. We've gotten down just 2 days ago. We were below 30. Right? You want my pattern for AMC? Yeah, I think it might run a little higher today. Right? But the pattern, if we look at what's happened with this pattern before, you come into, well, the last time we had earnings, you got to go back to May. And it really didn't do much then, but that wasn't because at the time it was a $9 stock and it caught headwind all the way up to 72. Now, the company's profile really hasn't changed that much. In fact, if anything, the more good news they have come out, the more this stock tends to drop. Option traders, I have to say this. There isn't even a decent option trade on here that I see right away. In fact, AMC dropped off my top 10 most expensive options to trade. I'm going to share with you, though, what those are. But yeah, it just doesn't look like something I want to jump into. But let's take a look at it anyway. And look at it, try to look at it as rules-based traders and not emotionally based trading. Emotionally based trading, we have none of that in this room. So what I want to do is I want to look and see what AMC is doing on my list of trades. And so popping back over to stock charts, AMC, here's AMC. AMC, you know, when you see the triangle up, that doesn't mean they had a positive earnings announcement. It means their earnings announcement beat expectations. So maybe their loss wasn't as great as people thought it was. And earnings announcement is coming up today, and we haven't gotten the idea of whether it's an up or down earnings. We're going to find that out here very soon after the market closes. But are there any patterns to be found in AMC? And the answer is no. There are no seasonal patterns out there right now that I see at all. All right, number 2. The trend on this, well, there's no trend. The only thing I see on here, if you absolutely must trade this, 38% retracement level we pulled back to. It actually held. So I would look at 29.46. If we close below that, if you absolutely have to go long in the stock if you can't stand it. there's a stop right below that area. Closing stop, 29.46. We close below 29.46, and you got all this air down here that's got to be accumulated. All right, but I don't see a trend. I don't see a seasonal trend. The fundamentals right now, it's anybody's guess as to what is going to be reported today, and more importantly, it's anybody's guess as to where the stock's likely to go. So let's get out of AMC. By the way, I am not a holder of AMC, if you figured that out by now. How about the next one? Coinbase. C-O-I-N. All right, so the word is out. Yes. If you followed me for the last couple weeks, couple months, all right, I actually bought Coinbase the day at the 300 area, all right, when it went public. Let me see if I can get a larger chart on here. I might not be able to get a larger chart. Nope. Here's when it went public, end of April. I own it. I actually owned the first part of the stock I owned above 300. Again, this is a play on Bitcoin to me. Again, I'm not trading this. I'm investing in it. All right. So as I see stocks dropping, I bought on the way down. No, I did not get it at $210. I think my lowest buy-in was around $225. But I'm averaged in, and until last week, I was underwater on this stock. Right? In fact, my average price is right around this 50% retracement level. Now we're above it. Now I see some positive momentum. And I'm looking at this as a play on Bitcoin. I'm looking at this as a play on the amount of money that this company makes. This company rakes it in right now. I don't care about competition coming. Competition will come eventually. Until then, these guys are going to rake this money up big. They're raking it up big like a real estate broker, like a full service real estate broker, like a 6% real estate broker, only more, only better. That's my take on Coinbase. What have I been doing with Coinbase? I own the stock, and I've been selling puts to own more stock. Most of the time, I've been getting that stock. Some of the time, I've actually been awarded all of the time I've gotten the actual premiums. Some of the time, I end up with the stock. So I'm holding the stock. I'm holding it below the price that it's at today. And, just like GLD, it's more of an investment for me. But unlike GLD, where GLD was down today, this one's come up, and it has bested my losses in GLD more than this profits on coin more than outperform the losses. It is a bit about diversification, but what I talk about here as a trader and investor is follow your rules. What are the rules that I use to get into gold? What are the rules I got used to get into Coinbase? They're longer term. I'm averaging in as an investor, but I'm also doing it with high volatility, right? One big thing that's missing on this chart, I'm going to add it right now. Look at the overlay. So I'm going to put the 7 to 30-day option premiums on here. Check that out. See how high they were as it was dropping? And we dropped into lows. So the red line is the option premium. The higher that red line gets, the more option traders are paying for near money options. So those at the money options back in May were trading at a level of 90%. And then it dropped down in June to 45. So what that meant was that in May, option traders were paying twice as much for time value as they were in June. Now look what happened between June and now. We went from 45, we're back to 85. The earnings are coming out tomorrow. Everyone's expectations of where these earnings are going to be is pumping up the premiums right now in Coinbase. So I'm selling these options. And I'm selling them because A, yes, I do want some Coinbase stock. But B, I want that juicy premium that's coming along with it. So the answer to my question is yes. Coinbase is the stock that I own. Let's take a look at Disney, DIS. Now, the other reason we're picking Disney too is that earnings on Disney are in 3 days. So they're supposed to report on the 12th, Thursday after the bell. So you see Thursday after the bell. And what's happening with Disney is kind of the same thing. You see that option volatility. It's curving up. And then right after the earnings come out, boom, it drops. The last thing that you want to do consistently is buy call options or buy put options the day before earnings, expecting the stock's going to pop in price and reward you. Now, it will happen once in a blue moon. Give you an example. A couple weeks ago, Snap reported earnings. Anyone who held calls in Snap through earnings, they got rewarded. I mean, the stock was up 20% in one day. But that's the exception to the rule. Most of the time what happens is, yeah, we could get a bump up, but the premium drop is so hard that you could see the stock go up in price and the options cave in. It's happened so many more times than the exception. All right, so that's why I see with Disney, we're seeing those options start to kick up in value. They've gone from a low of 19, they're up in the low 30s right now. As we get closer and closer to Thursday, I expect those options are going to continue to go higher, and you could see again Disney's options coming in for twice the premium that they were just a month ago. Okay. So before I get to my cheap and expensive options to round out our broadcast here, let's take a look. Adrian says he's about even on coin. I see that. I hear you. I hear you. I'm above even now. Because I went into it right when it came out. I believed in it. I still do believe in it. I just think that looking back, yeah, that was a little bit overpriced on that IPO. But you know what? I also got the IPO on Robinhood, and I actually went into the direct IPO of Robinhood. Not a lot of people did. In fact, that day, those first couple of days, there was nothing but negative comments on Robinhood. Most of that was coming from the meme crowd. But I looked at it as a longer-term play, and of course, as soon as the options opened, bang! I mean, it just went to the moon. I still think this is a longer-term play, so it's gonna have some volatility to it. That's for sure. So, looking at coin, I'm with you. So, wow, Claudia, thank you so much for the comment there. Explanation, more educational than a trader of watch. I'm going to join the money calendar, use your tools. Thank you, much appreciated. I appreciate the comment, Claudia. Thank you so much for posting that. And Rice is saying, where do you see Coinbase stock going in 4 to 5 years? That's a tricky one because, I look at Coinbase as a play on cryptocurrency without being in cryptocurrency. But if I were looking at Coinbase on its own, I have to say that when competition comes in, those dealer fees or whatever you want to call these things, commissions, if you want to call them commissions, whatever you want to call them, the money they're making is going to shrink as competitors do come in. But as long as Bitcoin and Ethereum still rule the roost and move higher, and as long as they're throwing their weight to the new altcoins that everybody seems to be talking about, I believe that we could see Coinbase having some highs. I mean, I think 600 is a target on the horizon. I think double that IPO is definitely within reach. And I think that could happen, and I think that can actually happen within the next year. So that's where I see it going for the long term. All right. So, and you know what? While we're talking about this, before I jump to the morning report, let's get back to cryptocurrency. I hear this comes up every single, I don't know why I wasn't asked yet, but I'm going to ask it and answer it right now. So almost every single live stream that I do, I get this question. What if the government bans crypto? What if the government, does their own digital currency? And both of those are already happening. But the latest one is, what if the government regulates Bitcoin and regulates the cryptocurrency market, especially the U.S. government? Where does it go from here? A lot of people worried about that. I'm not. I want you to go back in history for a moment. Do you remember? You don't remember. Through history, remember when traders used to trade under a tree on what is now Wall Street before the stock exchange was created? And regulation occurred then. And what's happened? The market exploded, right? Same thing held true with commodities. Same thing holds true with ETFs, right? Any new product that gets regulated, there's always a bit of resistance, and then things start to flourish. You know what it does? If our government regulates Bitcoin, regulates cryptocurrencies in general, yeah, there'll be a few coins that fall off the way. just like the internet heydays of the late 90s and 2000. But what it ends up doing is it legitimizes the coin. It basically says the government actually believes this stuff is real. Now, it's not what the government sees. The government sees more dollars coming in through regulation, through taxes, etc. But what it tells the investing community is that these are legitimate investments and money pours into them. So I'm hoping that the government does legitimize and regulate cryptocurrency for that reason, that it will show in the eyes of big investors that this is for real. And what you're going to see if that happens is all of a sudden these ETFs that we keep hearing about, that keep getting the Bitcoin ETF, the Ethereum ETF, the ETFs that the Winklevoss twins have been trying to do for years. All of a sudden, those are going to come in like crazy. You know, if you think GBTC is the thing right now, you haven't seen anything yet. All right. So, Georgie, thoughts on long calls on coin? I would wait until after that earnings report. You know why? Take a look at this. Let me just show you what's going on with Coinbase right now. Guys, you realize that if I had nothing else to do, I could just sit here and live stream all day long. But I do have a few things going on. But let's go ahead and look at coin anyway. Coinbase. All right. Coinbase. Now, if you take a look, this was last week. Let's get rid of that. You know what I need to do? I need to update. I need to go out here and update my options chains. Let's just do that real quick. We're going to go to today's date. We're going to go to coin. I'll blow the screen up in just a moment. As soon as I get something worth looking at. August 13th, this is what I want to see. So there you go. This is just the options that expire on Friday in 4 days. So, Georgie, when I'm looking at this, I'm looking at these at the money calls. Take a look at this. We're getting there. 277 halves. 4 days to expiration. The at the monies are trading for $12.30. All right. So you see here, it's 275.92. The 275s are the closest to the money. $13. We need a $13 pop just to break even. So I'm a fan of buying call options when that chart that I showed you, all right, the stock chart on coin. Let's bring it back up again. It's not the stock chart I'm interested in. It's this option chart. See how high that red line is from where it was just a couple weeks ago, all right? Down here was the time to be buying call options. Even here last week, before everybody started talking about it, your call options were, well, a little more than a week ago, they were trading less than 2/3 of the premium that they're trading today. So buying call options for $12.75, we need a big jump in Coinbase. We could get it, but probabilities suggest that that's not going to happen. I might be wrong. We'll wait and see. All right, guys, let's take a look at cheap and expensive options on the morning report. In the morning report, you guys all have the ability to get to this. You have the ability to get to this through this particular suite that we have available on the iPhone and Google Play Store. All right, the Apple App Store, Google Play Store, TG Suite, TG Space Suite. Download the morning report. The morning report's going to have, once you download it and you open it, if you're a member of our option tools, you can log right in. If you're not, go down to the bottom where you would see something that says non-subscriber login. Non-subscriber login, you're going to need a username, email address. Once you do that, you're going to see the suite. The suite will have the money calendar. It'll have something called Darknet. It'll have weekly cash clock, microcurrencies, velocity trader, triple threat. These are all premium scans that we offer to premium members. But the one down at the bottom says morning report, you get that. That's absolutely free. Click on that. That's going to take you to this area right here. There are 6 different reports. I'm going to show you 2 of them this morning. The 2 I want to show you this morning, take a look at expensive IV, cheap IV. This is what's expensive coming into today. And what I see is KSU, KWeb, CNI, Billy, Real, which reports earnings, Joe, which is the coffee ETF, cup of coffee is a little more expensive than it was last month. TTD, Info, Rio, and FUV round up the top 10. These are all options that in the last year, they've been cheap, they've been expensive, but right now, some of these are hitting their all-time highs, like KSU, Kansas City Southern. A majority of these have earnings reporting this week, which is why they're high. But if you want to see the cheap stuff, that's on the right-hand side. Ford Motor Company has some of the cheapest options that they have seen in the last year now that their earnings are behind them. Same holds true for Plug Power, DraftKings, Uber, Intel, Tesla, FCX, Microsoft, US Steel, and Verizon, all having the cheapest implied volatility out there. And by the way, for a lot of you asking about buying calls or buying puts, this side of the screen, I take a look at the chart and I see, does this chart give me a reason to go long? Or does this chart give me a reason to go short? Is there a rule behind trading anything on the right-hand side, bullish or bearish? And if it is, I know this side that these options are cheap. Okay. So I see someone's asking about Home Depot and also NVIDIA. Let's go ahead and bring those up real quick. And I see EDU on the screen. I've never looked at EDU, so let's take a look at EDU real quick and see if I even have anything to look at here. New Oriental. Okay, so EDU is an optionable trade, as you can see. And I'll tell you, this is why I don't see this one, because it is a $16.50 stock way back here. And I imagine if I keep going farther back, this is probably going to go up in value. Look what's happened to this one. Come all the way down. Then it dropped down to, now it looks like it's dropped down into $2. So this one's down 90% off probably for over the last year. Nothing here excites me about EDU. I'm sorry, that's just the way I see it. Looking at Home Depot, HD. Home Depot reports earnings along with a lot of retailers. This is going to happen next week. And as you can see, Home Depot had a big, massive run up since March. High was 341.12. We've seen the pullback that's happened. This may not even be the low. All right. I probably have to go back. Let's go back 150 days. We have to calibrate. That's a good number. That's a good number. All right. Even let's go 125. And the reason I want to go 125 is I want to show you as much of the chart as I can. There you go. 250, 340. Then we had a drop. Then earnings came out. And what happened was had the sideways move and a pullback. So is it possible that we get the same kind of action with Home Depot that we've seen before? See what happened on the prior earnings? Pullback. Earnings pullback. This earnings pullback looks like it was about 2 weeks. The pullback here looks like 30 days. So somewhere between 2 and 4 weeks, Home Depot seems to be pulling back after earnings. If you're a long-term holder of Home Depot, to me, I like to follow the patterns, right? So that's what I would see coming up. What we also see happening is take a look at what happens to Home Depot before the earnings. Typically runs up right before earnings. It didn't last month. It did a pullback. So really it's now if you look at the last 2 earnings, it's a coin flip. What's going to happen between now and earnings season? But looks like the stock likes to drop after earnings. So the one thing that is true, the volatility runs up into earnings. It's done so the last 3 times that we see here on the screen. It's doing it right now. NVIDIA. And NVIDIA you see is a long-term chart. You can see here with NVIDIA, we've got that move to the upside. Now, this one too, 120 to the downside, 206 to the upside, pullback, and then, of course, run back up. We're very close to this high. I absolutely love NVIDIA. It's one that's on my bull list right now. It's one that I traded. I even traded it, I believe, in this room last week. So I am still long NVIDIA. I'm still waiting for that pop up. NVIDIA has earnings in 9 days. This is an earnings play where I believe the stock is going to run up into earnings. What it really needs is it's going to need a couple of days for the market, and more importantly, the tech market, the NASDAQ, to move higher and recapture some glory. And when it does, I think you're going to see this thing pop hard. And I'm looking for 210 to 220 on this one before the earnings are even announced. But long term, great stock. Great stock. Cannot have enough of NVIDIA as a long-term holder. All right. So, guys, I want to finish off looking at our charts one more time. This time, what I want to do is I want to see what's happening with the markets as we head into the rest of the day. So, for that, I'm going to move over to a 5-minute bar. I'm actually going to take my style, and I'm actually on Thinkorswim right now, but I'm going to hit my time frame setup, and I just want to look at what's going on for today only. So, my time interval is going to be 1 day, 2 day. How about today? 5-minute bars today. Let's start with SPY. SPY, right in the middle of its opening hour range. I see bullishness if we get above the opening high at 442.80, bearishness at 441.31. Next thing I want to look at is USO. Oil. Remember, oil dropped really hard, and by 10:30 or around 10:20, we hit the lows, 45.87. They're getting some bullishness that popped in just after 11 o'clock. I wonder if there was a report that came out that pushed it higher, or a trader's just jumping out of shorts from this morning. Anyway, highs for today above 46.50, lows for today below 45.87. GLD, wow, there's the red day. GLD, again, it had lows down, those opening hour lows right around 10 o'clock. Ran right through those 162.36. They're at 161. The low was 48. Very close to an area where what I like to do is measure that hour. And if we break out and get down to that hour, that tends to be a sticking pattern right there. We will see what gold ends up doing, but definitely having a bearish day today. Remember, I talked about the fact that I'm an investor in gold. I'm not a trader in gold. As an investor in gold, not doing so hot. Coin, much better. Coin had hourly lows right off the open at 267.30. The hourly highs were 278.08. Above 278.08 we see bullishness in Coinbase as we head into the day. Let's look at AMC. AMC is right in between its opening hour high at 34.13, opening hour low at 32.35. And Disney, I'm going to finish out with Disney, the third of the stocks I was looking at today. 177.31 is the opening hour high, 175.06 opening hour low, 175.60 we're right inside the middle. All right. So that is where I see us moving around for the day. And as I look at our final comments on here, Gerald says, thank you very much for the chart on Home Depot. I appreciate that. How about the high option volume on IBM? You know, IBM, Lauren, was actually on our top 10 list last week. And if we were to look at IBM, we could look at it two different ways. Let's take a look at it and see what's happening over here. I mean, it's lower. It's lower for the day, and it dropped into what I call the red zone. It's pulled back a little bit. But if we want to look at this one on more of a, more of what's happening on the options, nothing more to do than to come in here and take a look at this chart, right? So you can see the vol was much, much higher than it is right now. I mean, the vol right now, and this is after earnings, it's popped down. And although it's not as low as it was back in June, it's actually quite low when you look at it compared to where it was just a couple of weeks ago. All right. And Miguel is asking, is it time to check out the cheap IV trade chances? I just put the cheap IV up in the morning report, and you can see on this side right over here, these are the cheap IVs for today. You see Ford, Plug, DraftKings, Uber, Intel, Tesla, FCX, Microsoft, X, US Steel, and Verizon. All right, guys. Put it back up on the screen there, Tom, so that Miguel and everybody else can see those. That is now, if you want this report every single day, this is for you, Miguel. You want this report every single day, this is what I'd like you to do. Pop on over to your local app store, all right, whether it's on Apple or if it's the Google Play Store. What I want you to do is I want you to download something called TG Suite. When you download TG Suite, you can log in if you're if you're one of our option subscribers. Just use your username and password. If you're not, go down at the bottom and it'll say non-subscriber login. All right. Name and email address, I believe, is what you need. And then, bam, you get this. And this right on my phone. This on my phone is the morning report. So I'm going to show you real quick. that if I have this thing right there, now the top six are for members only. But if you click on the bottom when it says morning report, it's going to show you these 6. Let me put it in view. These 6 particular lists updated every day. Miguel, if you click on cheap IV, you're going to get those cheap IV options that I just talked about. There they are. And then you can click on them like Ford. And I've clicked on Ford, and then it gives you the chart in more of a landscapey view. There you go. And you can look at this and read it till your heart's content. All right. So that is the cast that I have for you today, guys. Thank you all very much. Hey, do me a favor before you head on out of here. Show us some love, like this program down below. It helps support the channel. If you're brand new, subscribe to the channel. We do videos here every single week. I got the podcasts on Thursday. And so till then, have a great rest of your day. Thank you all for joining me here over the last 1 hour and 16 minutes. I do appreciate it. I'll see you again here, same time, same channel next week. Bye, everyone.